So Netflix stock went up 3% after they reported earnings, but after the conference calls and many other things, the stock dropped massively. So today we're going to talk everything around Netflix and their earnings and why the stock went up at first and then down later. Hello everyone, welcome back to the channel. If you're new to the channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out with the YouTube algorithm. Now let's go to my computer to go and check all the information around Netflix. So as we can see here, the stock has been trying to recover today as it is actually up 1.73% since 9 a.m. since the market opened, but as it was down a lot pre-market hours and after hours, it's still down 0.88% today. But still, the stock has been performing quite well in the past 6 months. It is up 15% and 21% in the past year. Now, we can see here that even though the stock is 1.26% down, it has a market cap of $276 billion and a PE ratio of 64, which in my opinion is a little bit high at the moment. Meaning that it has a forward PE of 48 and a price to sales ratio of 10. Now let's see their earnings. First of all, Netflix gains 1% as subscribers, profits beat expectations in Q3. As I said, the stock went up massively at the beginning. The company added 4.38 million global streaming subscribers, which we will check later on their shareholders letter. It was better than their own guidance, which was 1.54 million, which in my opinion, what they were really lowballing this as 1.54 million subscribers in a quarter is really low for Netflix. I do understand that last quarter was like that, but it was way different thing. Now, analysts were expecting 3.5 million, so still they did better than analysts. Now, they reported a revenue of 60% growth year over year and earnings per share grew 83%. As we can see here, they reported, as I said, an earnings per share of 3.19 versus 2.56 expected. Something that I like here is this chart that CNBC posted, where they show us their quarterly subscribers additions since 2017. As we can see here, they added 4.4, which obviously is way better than Q3 2020, but still not as 2019. Now, we know that last quarter was really bad for them as they only added 1.5 million, but we do have to take into consideration that 2020 for Q2 was incredible and they added 10.1 million subscribers, and in Q1 was way better. Still, they are not in pre-pandemic levels yet. They are expecting for next quarter to grow, and we're going to talk about that later, but still people did not like that a lot, and you're going to see why. Now, they did say that they are seeing the positive effects of a stronger slate in the second half of the year, and in my opinion is because they have been having better content in their platform at the moment. Now, we can see here that they under-forecasted paid net ads for the quarter. As we already said, they had 4.4 in comparison to the 3.5 that analysts were projecting. Now, for the second consecutive quarter, the APAC region, which is Asia Pacific region, was their largest contributor to membership growth with 2.2 paid net ads. But we're going to check that now. As we can see here that UCAN, which is United States and Canada, so North America, had a revenue of $3.2 billion, but net paid members of 74 million, which as we can see, it is better because it's still an increase of quarter over quarter and year over year as well. As last year they had 73 million and last quarter 73.95 million, which is actually great news because last quarter they did see an increase in United States and Canada. Now, something that they can really do in United States and Canada or North America that helps them a lot is their average revenue per membership. They're able to increase it without any problem at the moment. Right now, they have an average of $14.68, which we can see that increased a lot as last year they had $13.40. That's not something that they're able to do in the other regions. As we can see in EMEA, which is Europe, Middle East, and Africa, reported a revenue of $2.4 billion, which is an increase quarter over quarter and year over year, and a paid membership of 70.50. Something that I noticed here is that This is increasing faster than North America, and it is getting really close to what paying members they have in North America, which is pretty nice. The only thing is that here they are not in Europe, Middle East, and Africa. They're not able to charge as much as in North America. They charge about $11.65 on average, which still is a nice increase from last year from 10.88 and a slight decrease since last quarter. But still, it is impressive that it is getting really close to what they have in North America. Then Latin America, they have 38.99 million paid members and 915 million in revenue. Same as before, this is the lowest paid region. As you can see that they have an average revenue per membership of 7.86, which increased quarter over quarter and year over year, but still it is way less. It's almost half than what they charge in North America, and still less than Europe, Middle East, and Africa. Then in Asia Pacific, they did see a nice increase from 23.50 million to 30 million paid subscribers, and also a nice increase quarter over quarter. But again, this is not the highest paid as well. As we can see, they charge $9.60 per membership on average, which is a decrease quarter over quarter, but still kind of a nice increase year over year. Now, the increase in average revenue per membership in all of these regions is what has been helping them increase their revenue that much lately. But something that people did not like is that they said that for quarter 4 2021, we forecast paid net adds of 8.5 million, consistent with quarter 4 2020 paid net additions, which means that they're not expecting to grow this next quarter. For the full year 2021, we forecast an operating margin of 20% or slightly better. The year-over-year decline in operating margin is due mostly to our backhold big content release schedule in quarter 4, which I think it is normal to expect this decline in operating margins, because last year they were not able to film new content, so they've been doing a lot of that this year, and they've been spending a lot of money in that. What people did not like was they're expecting 8.5 million paid ads users, paid net ads for quarter 4, and they did not like this because even though last quarter was an outlier and they had 8.5 million in additions for quarter 4, we can see here that in quarter 4 2019 they had 8.8. So they are not going to grow in comparison to 2020, and still they are still below pre-pandemic levels for quarter 4. So people are not liking that much at the moment, even though we already know that there is a limit in this industry, and there is just so much people that are able to have Wi-Fi access or internet access and are able to pay for Netflix. But still, analysts and investors are expecting this company to continue growing paid net subscribers, which is very important for many, in my opinion, for me as well. And the stock dropped because of that, because they will not be growing in comparison to 2020, and they're still below pre-pandemic levels. Also, we can see here the share of total US TV time in September 2021. We can see that it decreased. Last time that we talked about Netflix, this was 7%, meaning that it decreased to 6%. Still, Disney was 2% at the moment, and it is right now 1%, meaning that other streamings are increasing. It was 8% and it is now 9%. So people are worried that maybe others are getting more views at the moment than Netflix, YouTube, Hulu, Prime, and Disney. Now, under statement of operations, we can see that their revenue did increase 16% year over year. Cost of revenue only increased 8%, which in my opinion is pretty nice, as the revenue increased way more than that. But marketing increased 20%, technology and development increased 24%, general administrative increased 18%. But still, it's very nice that their operating income increased 33% year over year. Yes, they did see a decrease quarter over quarter, but still year over year was pretty nice. I understand that even though they see an increase quarter over quarter as well in revenue, and a decrease in operating income can be kind of concerning for many, but they did see a kind of increase in marketing here, so that might be causing that decrease in operating income. Still, they were able to report a net income of $1.4 billion, which is obviously huge, 89% if I'm not mistaken, in comparison of last year, which was $789 million. Now they did mention, remember that I said that they were going to get into the gaming industry. They updated investors and it's pushing into gaming. The company said it's begun testing its game in selected countries, but it remains very early days for this initiative. And what they want to do with this new gaming thing is to grab more users' attention, competing against activities like TikTok or playing Fortnite, because they saw a huge increase in engagement of 14% during the same period of time that Facebook experienced a global outage. So they believe that they are able to increase their engagement in both Netflix and their gaming segment of the business when they start with it, if they're able to grab those members that are actually spending a lot of time in TikTok or playing Fortnite or YouTube or any other streaming service. But I believe this might be good for Netflix. We just want to wait. We just have to wait and see. Still, I believe that Netflix is a little bit expensive for me right now. I'm not buying this stock at this moment, as I believe it is a little bit high. Even though the stock went down yesterday, it is still high. And almost at all-time high, as we can see here. And I don't like to invest in companies when they are in all-time highs, even if they are seeing growth. Right now, at the moment, I don't believe it's the best time for me to invest in this company. We do have some excellent companies reporting earnings in the coming weeks, so I will leave you this video here so you can go and check out which companies are reporting earnings this week or next week. Thank you and see you next time.